Dan Ives says the next phase of the bull thesis in Tesla has begun in 2024. We believe $350 is our new price target. And he discusses this on CNBC. It's about a minute and a half long. We'll play it for you here in this video. But I just want to say congratulations for anyone that is watching this video, taking your own financial destiny into your own hands. Not enough people do that out there. So you are special, blessed, whatever word you want to put, to be able to do this, to have the insight to do this for yourself. My name is Michael Tyler, guys. Thank you for joining us here today. We are going to get into everything you need to know in regards to Tesla stock, all of your Tesla news. We're going to look at Google Trends data, the AI investor sentiment survey. We're going to look at inventory numbers for Tesla, take a look at the charts, all of that good stuff. So let's just go ahead and jump into it with Dan Ives.
Could be 70. People love to hate on Tesla because I think they love to hate on Elon Musk. And I'll let people decide whatever they want out there, okay? Is Elon Musk hurt the company or help the company at this point? Because people don't realize Musk is not running Tesla. There is a management staff that's very quiet. They're not on Twitter. They just go about their job every day. But he's the face of it.
He's the golden
He created it. But there's a whole team actually running the company.
There's a team that runs it, but he is the hearts and lungs of Tesla. And that's from a brand perspective, as we've talked about, I still believe right now that's a contained issue relative to what's happening in Tesla. The irony is this quarter, we see a record quarter in China. So we're not actually seeing demand.
Even against BYD.
Even against BYD.
Which is the Chinese car company that's taken over China. I mean, and probably soon to come here.
Soon to come here, but in China, they've held their own. And I think this is going to be actually a record quarter from a China perspective. I think we go into this next year, margins increase, they gain share, and now full self-driving, I'd argue the AI piece could be $75 per share. And I think that's what we're going to be talking about 1-2 years from now.
Let's talk Tesla. Tesla, pretty incredible run this year, more than doubling its value since January, and some think it'll only go higher next year. Top tech analyst and Tesla bull Dan Ives out with a new note saying Tesla will hit a $1 trillion market cap in the upcoming year, and he's raising his price target on the stock to $350 from $310. He is here in person. Dan, thank you. Appreciate it.
Great to be here.
A lot of people coming at you on social media about this price target, even if they're saying, well, Tesla sucks. They're coming at you from a fundamental perspective, saying, I can't do the math and the earnings, the valuation. How do you get to 350?
Tesla is where Apple was in 2008, 2009. In terms of the sum of the parts and the software piece, this is just starting, what I view as the next phase of the Tesla growth story, hits starting in 2024. And at this point, from electric vehicles, they're doubling down where others are peeling back. I think margins actually start to increase. I think this is going to be a golden year for Tesla. At the end of the year, I expect them to be above $1 trillion.
Well, pretty powerful stuff. Morgan Stanley's outgoing CEO, James Gorman, said financial markets will, quote, take off once investors are sure the Federal Reserve has finished raising interest rates, the Financial Times reported on Friday. Some people still think there's a chance inflation comes back and the Fed needs to raise rates again. Once you get that actual confirmation, once the Fed says they're done raising rates, I think that's probably a big moment for trading algorithms to start a very euphoric rally to pull in trillions of dollars on the sidelines back into markets. And according to Morgan Stanley's outgoing CEO, this could happen pretty quickly. It's probably not going to take a huge span of time to see a lot of money come back into stocks. And honestly, just based on the technicals with Tesla, it looks like we're poised for a continued breakout. This couldn't be happening at a better time for Tesla. If the markets truly do take off, Tesla stock is going to rip faces off the shorts, probably exceed Dan Ives' price target of $350 per share. I would argue pretty quickly. Hey, but we'll have to wait and see, and we'll talk about the Tesla technicals in just a moment. Let's get into all of your breaking news today. 85 Cybertrucks are spotted at Giga, Texas today. That's up from 63 yesterday. And some of this 85 number is a little bit of a rollover from yesterday's number, but that's still adding quite a bit just from yesterday. And as you can see from these photos, some Cybertrucks are being grouped in with other Model Ys and Model 3s, and then you have this parking lot that looks like it's just Cybertrucks, but all in all, quite a few of them that are currently being shipped out. Truck engine maker Cummins will pay a record $1.6 billion for a penalty for installing emissions defeat devices on 630,000 Ram pickup truck engines, the largest ever penalty for a Clean Air Act violation, the Justice Department announced on Friday. Tesla Australia and New Zealand posted to their X account, the South Australian government is ending the EV rebate by the end of 2024. Eligible Tesla vehicles purchased prior to December 31st, 2023, even if delivered in 2024, can receive the full $3,000 rebate and 3 years of free registration. GM has issued a stop sale for its new Blazer EV due to software-related issues. Customers who own a Blazer EV will be required to go to a dealership to update the software. The issue is not safety-related. As Sawyer Merritt says, this would be national news if this was Tesla. NIO today unveiled their new flagship EV, the ET9. The starting price of $113,000, steer-by-wire up to 600 kilowatt-hour fast charging, 158 miles in 5 minutes, in-house developed 46105 cells, NIO self-developed 5nm intelligent driving chip, 209 inches long, delivery start Q1 of 2025. We do have some misleading Reuters articles that is causing many people to come to incorrect conclusions that 4860 battery cell production is what is really putting a damper on Cybertruck production. One, it doesn't look like Cybertruck production is slow by our estimates. It seems like production is right on track to where we expect it to be, number one. But Tesla has been creating 4860 battery cells long before the Cybertruck was ever here. I believe 1 million of them was created by June. We just started deliveries of the Cybertruck in November. So there's built up 4860 battery cells, and they're continuing to crank out more. It looks like you could be at about 25,000 Cybertrucks a year, probably push about 50,000 Cybertrucks for this year before battery production would even remotely be a problem. So at this point, it's not even close to being a problem, but it's something we'll want to watch going into further years. Here's an update. Tesla paid $31 million for a 48-acre plot of land, a government statement said. This Megapack factory will be near Tesla's Giga Shanghai factory. Construction is scheduled to begin in Q1 of 2024, with production starting in Q4 2024. This is in regards to the new Megapack factory in Shanghai. And I made a video on this yesterday because this is clearly big news. Tesla stock was red on Friday. I think a lot of people come to the conclusion that if we get really good news on any given day, but Tesla stock is in the red, it's bad news, that it couldn't be some big news. No, this could add $80, $40 to $80 to Tesla stock once you actually start cranking out Megapacks. So in the not too relative distant future, this is big news. Tesla stock was red on Friday because Wall Street does not understand Tesla, and they don't even understand this news yet or what this means for Tesla stock. But this is very big news. So just be careful trying to read through the lines to say, hey, we got this news today, Tesla stock is red, it's bad news. No. That's not what you should do. That's how you end up like the $22.5 billion worth of short positions. You start to believe all of these things that happen with Tesla are really not good, and they are. Now, Rivian appears to also be making great progress with their delivery van fleet. These look like Prime vans, just if I can, see the labeling here. I believe they have a big contract with Amazon, and it looks like they're cranking out a couple thousand at least here alone. Josh Brown said today on Tesla, quote, "This is a way better stock to have bearish commentary on than actual bearish positions." You agree with that? CNBC's Dan Nathan says, yeah, because I lost a lot of money this year. Josh Brown is probably my most liked analyst out there. Besides like a Dan Ives or some of the more well-known ones. Josh Brown is mainly on CNBC, goes on CNBC all the time, runs a fund, and he also is like a co-host in this podcast, the Compound podcast. I recommend you guys check that out on YouTube as well. A lot of great information is shared, and I just like Josh Brown's opinions and takes. I think it resonates a lot with the style of investor that I am. So I'm going to go ahead and run this clip for you. I think this is going to be a growing narrative in 2024. You don't want to bet against Tesla, and those that are betting against Tesla are about to lose a lot of money.
The inverse Tesla. And I was dead right on the fundamentals of this company this year.
LOL! I was right on fundamentals. Get the out of here of Tesla.
Dead wrong on the stock performance. All that being said, okay, they have had 3 consecutive disappointments. Their earnings are going to be down 25% year over year. Their gross margins have gone from 25% to 18%. Okay, they're going to miss their delivery.
Dan, I love you, but we know you don't get paid on fundamentals.
Okay, but what I do get paid on is having sound analysis. Okay, and I'm wrong a lot. And anybody in this market who tells you they're not wrong that much, they're full of shit. Okay, so here's the thing. Like, you have to have a fundamental grounding for any reason of you're going to buy or sell something, even if you're selling something after you've already bought it. And so, like, listen, you could get the fundamentals wrong and the stock price right. I think anybody who bought the stock right now, but it comes back to time horizons, right? So margins have just contracted massively as, competition has increased. And then all of a sudden, maybe there's some issues in China. I'm not railing against this thing. I actually said on Fast Money the other day that there's a good chance that the fundamentals bottom out at some point early next year. What they got wrong is they thought there was going to be lots of price elasticity. They've been cutting prices for these cars. I know somebody who bought a Model Y for $67,000 a year ago. You can buy that same car for $47,000.
Is that how much
they've been killing them.
And you've lost the subsidy along the way.
And let me tell you something. The more Trump goes up in the polls, how likely do you think there's going to be a $7,500 EV subsidy in Trump 2.0 administration? So there's lots of headwinds for this company. Here's the other thing. This stock went into the S&P 500 exactly 3 years ago at $232. It's trading at $255.
It's barely up.
The S&P is up 30%.
Yeah.
Okay. So to me, it is about time frames. Fundamentals do matter, especially if you're picking stocks, not if you're trading them. Not if you're trading 0 days expiration option. Not if you're trading weeklies in Tesla.
Well, on Tesla, we'll move on at this, but on Tesla specifically, this is a way better stock to have bearish commentary on than actual bearish positions. You agree with that?
Yeah, because I lost a lot of money this year.
All right, I want to do this chart.
Nathan is certainly not alone. Tesla's short sellers, took a massive beating in 2023, down $12.6 billion, the most out of any other single stock out there. Even Nvidia, that went from $100 and some change at its lows up to $500 per share. Nvidia short sellers only lost $11.3 billion. It just shows you how short, how bearish a lot of people want to be on Tesla, when in all reality, it's just not justified given the long runway of growth that you are going to see in Tesla. The fundamentals, I mean, sure, margins could be better. Margins are going to improve. Sure, the economy could be better. Interest rates could be more, vehicles can be more affordable because interest rates could go lower. That's also going to happen in 2024. So if you were wrong on your bearish thesis in 2023, a lot of people are heading into 2024 with that same mentality. And I'm telling you, that is going to be one of the reasons why Tesla exceeds all-time highs next year. You currently have $22.4 billion worth of short positions. If Tesla stock were to theoretically double from here and hit about $500 per share, which I don't think is too unreasonable in the later half of 2024, then you could see almost $50 billion worth of a short position on Tesla at that point. I don't think shorts are going to last that long. So from some point between now and 350, I think a vast majority of shorts are going to be squeezed out of positions. And by the time you get to new all-time highs, I think almost all of the shorts are going to be squeezed out of their short positions. By the end of 2024, we might just be sitting back and saying 2024 was the year of the short squeeze for Tesla stock. The biggest threat to the bull thesis in 2024 is a recession. Not even just a recession, but fears of a recession. That's what really causes stocks to fall. Stocks fall before you're declared in a technical recession. Think about it like this. By the time you get the second quarter of negative GDP, you're already negative 1 quarter of GDP. So even before a negative quarter, the first quarter of GDP, usually you start to see a sell-off at that point. We seen that in 2022, right? Markets started to roll over before the first negative quarter of GDP. Back in October of 2022 when stocks hit their lows, that was because investors thought there was going to be a recession in the beginning of 2023. That did not happen. So stocks went higher, or at least gradually higher, your Magnificent Seven names. Well, if we start to develop that narrative that a recession could come in 2024, that's going to be a problem. So we want to watch the economic data. But what we got on Friday was very strong data. Over 5% durable goods orders month over month, coming off of a negative 5% prior month. That's strong. Personal spending came in a little bit light at 0.2%. The estimate was 0.3%, but it could have been negative. So that was still pretty strong as well. PCE was really the highlight. PCE month over month came in at 0.1%. The estimate was 0.2%. And if you look at inflation, inflation is running on the last 3 or 6 month annualized basis below the Fed's 2% target. You could actually be looking at serious deflation next year in 2024. All of this is likely to be great news for Tesla stock in 2024. You also have an inverse head and shoulders pattern that has really started to develop itself. Now, this is looking at Tesla on a weekly candlestick chart. You could look at this on the daily. It really doesn't matter. This just condenses the chart a little bit more. You are at a breakout point. If you get above 258 to 262, that's really the range in which if you break above 262, that's where you can really start to target a larger upside move from there. We've been very bullish recently. We're now above our shorter term downtrending line of resistance. If you pull this up to the daily candlestick chart, you can see this. We've talked about this for a while now. You actually broke above this, which would have been right here at about, let's see, about 245-ish. You broke above this on December 14th. You've been above this. As long as you're above this, it looks like the odds of a breakout higher are much greater than a breakdown lower. Now, markets are in a pretty vulnerable spot right now. We are getting these pretty aggressive intraday or end of the day sell-offs. If you look at the SPY on a 5-minute candlestick chart, you can see 3 notable ones here in the last 3 days. So every day at some point in the day, we have seen a sell-off. The 2 biggest ones were towards the end of the day. This one was a little bit in the middle of the day, although this one was by far the smallest one. You are getting a market that is becoming somewhat vulnerable above the 470s. That is on the SPY. So as you know, if markets do fall for whatever reason it is, Tesla stock is obviously likely to follow as well. Now, some people are starting to make the argument, which I have talked about for a while now, that big tech Magnificent Seven names are probably the ones that are going to be hit the most because they're trading at all-time highs with really extended valuations and muted growth. That makes sense to me. That could bring down your indexes, and it would not surprise me if interest rate sensitive names like Tesla or small and mid-cap stocks actually outperform as some of that money goes from Magnificent Seven into those sectors that should benefit from rates going down in 2024. All in all, really, if you're bullish on Tesla and you want to see a breakout from here, whether you're trading options, whether you just want to see your long-term positions go back in the green or become even greener, you really want to see a break above about 262. Once that happens, well, that's where things get a lot more bullish. If you break under about 244, that's where you could look at a bigger downside move down to the 220s, but that's not exactly my base case expectation. Tesla's relative strength index, the RSI, is at 58.14. If you look at the SPY, that is at 71.40, so noticeably different. The SPY, the ETF for the S&P 500, is technically overbought still. Anything above 70 is overbought. Tesla is neutral. Neutral is 50, but really anything between like 55 and 45 is pretty neutral. So Tesla's right there at neutral, which suggests maybe downside would not be as extreme in Tesla. And maybe Tesla, again, might actually rally if the indexes do fall. You could also make an argument that we are currently in a cup and handle formation with Tesla. This is the top of the cup. This is the cup itself. This is the handle. And if we break out from here, you could target the mid to lower 330 range in there. This is kind of the same setup that we had on the SPY, which I noticeably called out. I mean, if you have been a viewer of this channel for a while, you already knew this was coming for the SPY. We talked about this relentlessly here on the channel. This longer term cup and handle, especially when we were in the handle and we broke out above the really handle line, which was right about here at about 440. I mean, we called out all-time highs, and it happened perfectly. It's been quite aggressive, though. So we are, again, at risk of some form of pullback. We'll talk about that more in the next video, how to prepare for that, how to make money if that pullback does happen, what the best course of action might be, where Tesla stock could ultimately go during some form of pullback. So that is going to do it for this video. Hit that like button and subscribe to the channel if you found value out of this video. Thank you for watching. Enjoy the rest of your day, and I will see you in the next one.